Other thing, have you checked your 401k lately?
No, I prefer just to be blind and happy.
Ignorance is bliss?
Yes.
Well, maybe it's best if you don't. The market is set to open slightly higher tomorrow. This follows an 800-point loss on the Dow today. Also, the NASDAQ, where you find big tech, that dropped 4% so far in just this past week. The Dow has tumbled 5%, fueling today's sell-off, a second recession warning this month from Deutsche Bank. This time, they are saying a significant recession is on the way. I don't think we needed them to tell us that. We see it in the numbers. Joining us now, Scott Bauer, Prosper Trading Academy CEO. I appreciate your time.
Of course.
Hard to predict this, but it feels like we've got all the right red flags.
There are a lot of red flags, and even more so than we've seen in previous recessions, because you've got the geopolitical concerns going on in Russia, Ukraine, and you've got this massive, I don't want to say housing bubble right now, but people are so scared of what's going to happen with the housing market as well, with what we saw back in '08. So you've got so many things on the table right now, coming out of a period, obviously, of a pandemic that we haven't seen in 100 years, that the Fed, that nobody has really ever had the opportunity to react appropriately. Things are not good out there in terms of what is going on with rates. Now, does that mean that someone should go out and tell their investment advisor, just sell everything, go to cash? I would never, ever advocate for that. I don't think that's the appropriate thing to do. Recessions typically can lead to big market sell-offs. I think we're in a little bit of a different boat right now, though, because the economy is still very, very strong. We haven't seen much of a pullback yet. Sure.
And by every available metric that I learned when I went to school and got my economics degree, yes, the economy is very strong. Unemployment is low. GDP growth is high. Interest rates, relatively speaking, are still very low. But I can't imagine a time that there has been a bigger disconnect between the metrics that we usually measure the economy by, probably with the exception of inflation, and the disconnect with, if you ask any American how they feel about the economy, there's been a wider divide in those two things.
It's brutal. It's awful. And what's happening to Main Street right now, you go out on the street and ask anyone, and they're going to say, yeah, I didn't buy my Cheerios today because they cost 25% more than they did just 6 months ago. However, when you break it down on a more macro basis and look at past recessions versus what is going on right now, the outliers are that the economy is still very strong and that the job market is much different. The employment market is much different than in past recessions. Now, there's no question. There's no question that when we see an inversion, and for those people that don't understand what an inversion in interest rates is.
Explain that for the non-economic majors.
So typically, it would make sense that the further you go out in time, the higher your interest rate should be, right? If you're willing to give someone money for a longer period of time, you should get paid more money. So when we start to see the shorter term rates, 2-year, 5-year rates, start to invert with maybe 10 or 30 year, where someone's willing to pay you more now than for 30 years out in advance, that is absolutely the sign of a recession.
I'm going to quote one of my great economics professors, which is that the inversion of the yield curve that you just talked about has correctly predicted 14 out of the past 6 recessions. So it's happened before. Marty and I were talking earlier, $10,000 investment, started the year, it would be worth $9,086 since the war in Ukraine began, $9,720. And I want to get back to what you and I were talking about, which is this disconnect between what the numbers really say, and as you point out, how the metrics of the economy work, versus how people feel.
Well, yeah, and I think you've kind of got two fragments here, right? You've got people who are in the market and who are investing, and they're watching that, and you kind of ride the wave a little bit. But then you've got people who are looking at, you brought up cereal, for example, or if you go to the store and the price of eggs, for goodness sake, is really high. We did have some data on the price of meat, and people are buying cheaper meat right now. It's the everyday decision. So how do you advise those people to get through who are making pretty tough choices, whether they pay for medicine or they pay for food right now? How do I get through this, and how long do I have to wait?
Sure. So everybody has to prioritize, right? There are some items that people can afford not to buy, and there are some items that you need to sustain yourself. And you have to start selectively choosing which are the right ones. That being said, though, overall, we have not seen that pullback from the consumer yet. You can talk to someone out on the street, and I feel it, you probably feel it. But overall, the data says that we have not seen the consumer really pull back yet. And that's kind of the scary part about this, because we're all feeling it, but why isn't it coming through to the metrics yet? And I think that is what has put the Fed into a corner on what they're going to do. They know they need to raise rates. We all know that they need to raise rates to curb inflation, but raising rates, that's going to hurt the economy. So it's this vicious circle.
I'm surprised to hear you say that, though, because I was reading in the Chicago Tribune this week that people showing up at food pantries right now is skyrocketing. I mean, up 25% just since the start of the year, that they aren't going to the grocery store. They can't afford it anymore. So to some segment of society, they are having to make those tough decisions now.
They absolutely are, but that data has not flowed through yet.
You just have to imagine, though, that once it does, Katie bar the door.
It's coming.
Yeah. At some point that's going to show up in earnings and in data, and it's going to be a really bad couple of weeks or months.
Thanks for watching. Click the red subscribe button below so you can get more of NewsNation's fact-driven, unbiased coverage.